If you have ever wondered why the stock market goes up and down, you are not alone. Imagine a world where the stock market only goes up, never goes down, and market stability is guaranteed. What would you do in that world? You would buy as many stocks as possible, right? You would mortgage your house and buy more. You would even consider selling a kidney or liver and buy even more. That would be the reasonable thing to do. Okay, maybe not your liver, as you would die, but get the idea. The result, stock prices would go up and up, getting more and more expensive. Eventually, their prices would get so high that their future growth would shrink to almost nothing. People often say that economic indicators like GDP growth, inflation, interest rates matter, or that corporate earnings are the key. No, it doesn't matter, not in the short term. It's about something simpler. It's about the common life cycle of greed and fear. And the cycle goes like this. First, you think good news will last forever. You stop noticing the bad news. You start ignoring the bad news. You deny the bad news. Finally, you think bad news will last forever. Then you stop noticing the good news. You start ignoring the good news. You deny the good news. Finally, you start accepting the good news again. At the end, you assume good news will again last forever. And we are back where we began. The cycle of greed and fear repeats. This process doesn't need complicated math or formulas. When the economy feels stable, people get optimistic. That optimism leads to more borrowing and more debt. Eventually, that makes the economy unstable. A lack of recessions actually plants the seeds of the next recession, which is why we can never get rid of them. Look at the COVID-19 pandemic. It was a huge shock for us. But if you lived 100 years earlier, there was nothing unusual about finding yourself threatened by different diseases. Mumps, measles, chickenpox and polio. In 1900, roughly 800 per 100,000 Americans died each year from infectious disease. By 2014, that was 46 per 100,000, a 94% decline. Think about Jerry Seinfeld, who had the most popular show on TV. Then he quit. He later said the reason he killed his show while it was booming was because the only way to know where the top is to experience the decline. And he had no interest in experiencing the decline. If you want to know why there's a long history of stock market bouncing from boom to bust, bubble to crash, it's because so few people have Seinfeld's mentality. We insist on knowing where the top is, and the only way to find it is to keep pushing the stock market until we have gone too far. Are stocks overvalued? How high can Tesla go? You can't answer those questions with a formula. But there are two things you can do. One is accepting that crazy is normal. Beyond the point of crazy is normal. When your 70-year-old dad, who has never invested before, starts talking about buying cryptos because his neighbor ordered a $3.1 million Ferrari F80, it's time to be cautious. The second is understanding the power of enough, being more like Seinfeld. In the context of investing, this mentality can help you avoid falling into the trap of chasing more and more. It's easy to get sucked into the frenzy, thinking you need to chase the next big thing, pushing for higher returns. The stock market might average 7 to 8% returns over the long term, but you will rarely see that kind of return in just 1 year. Warren Buffett, the most legendary investor ever, once joked that you can't make a baby in 1 month by getting 9 women pregnant. Similar, you can triple the size of a human eater and expect triple the performance. You probably remember the numbers I shared at the beginning of this video. Nvidia down 85.5%, Netflix down 82.7%. These were among the top performing stocks in the US from 2005 to 2024. Check the table. But here's the catch. If you bought Nvidia at the wrong time and didn't hold on, you could have seen an 85.5% loss. It's a reminder, investing is never as simple as it seems. Markets go up and down. It's all about your mentality. If you found this video helpful, don't forget to like, share and subscribe for investing tips and stock market insights. And if you want to master the stock market in just 10 minutes, check my other video up here. Thanks for watching.